Welcome back to my channel. So today's topic is London Q Zone. Ah, well, I'm going to break it down to a very simple level. Before I always continue, I give a shout out to my coach SK. He did a wonderful job on me again. It's not usually very easy to to get strategies or to understand strategies because there are so many strategies outside there, but I hope this one will help you to also be profitable if you get used to it. Now, these are the rules and regulations that involve the London Q zone strategy. First, you look at the buyers on the daily time frame, the sweep of liquidity of the Asian range that will be on 15 minutes, on 5 minutes and 1 minute. Look at those time frames. The shift in market structure, that is for your entry. The use of institutional points for entry. The use of the indicator is called RJG trader. It's an indicator, Asian range indicator, but this is the owner of the indicator, and our target is 20 pips to 25 pips. So people will tell you 30 pips. It depends on every individual, but the rule that's for Michael Hudson is usually 20 pips to 25 pips. That's what my coach taught me to use also. But the highest is usually 25 pips. Then your time frame, the time range in New York time. If you have New York time, you use 2 a.m. to 5 a.m. London time, that's in case you're in, depending on your country, 7 a.m. to 10 a.m. You can come down here, tap your time, and look for the time that you use. I can decide to use Lagos, that's Nigerian time because I'm Nigerian. So how do we use it? We firstly, I want to show you how it is being used. I'm going to add everything that you are seeing here as one and show you how it is being used. Now, if you look at this area here, you can see that market did a break of structure, right? This is a shift in market structure because there was a shift here and there was also a shift here. So we categorize this as what? An order block inside here, as an order block. I don't like it blue, I'll turn it to gray. As an order block. Then we come down. This is what we know that we're going bullish. But also don't forget, I would usually tell people in case you're doing an overall bias um momentum trend, but we're only targeting 20 pips, 25 pips. There's a shift in market structure here. So you also be very careful around that area. Then I'll come down to my 5 minutes. On my 5 minutes chart, I'm looking for a bullish momentum. Let me delete this whole thing so I don't get you confused. I'll come to my indicator and I'll put in Asian range. Okay, Asian range indicator. Okay, I can decide to use this one. Okay, Asian range indicator and Q zone. This is what I'm going to use. Okay, let's see. And you can go to your setting here and you will delete some things. Okay, that's Asian range indicator. You remove this, you remove this, you remove this, and what again? That is it. So don't forget the indicator I used. I'm sure you saw the name there, right? NRG. What? You know the name indicator. You can play it back when you're watching the video. Now, I'll be waiting for markets to sweep out liquidity. Because it's a bullish momentum, I'm looking for a buy. This is what differentiates a London Q zone strategy to the Judas swing strategy. I mentioned that in one of the videos I did for Judas swing. So I'll wait for markets to sweep down, right? Market has swept down. Market has swept the low liquidity. Then I'll come down to 1 minute. On 1 minute, oh, I've missed the entry on 1 minute. On 1 minute, my institutional reference point, there was what? There was a shift in market structure here. If you have watched my video on swing points, you will understand what I mean when I say market shifted structure here. I'll take my Fibonacci from the high to the low. Institutional reference point, there's an order block here. Another block is here, and what do we have? We have a minor fair value gap. This is how direct this strategy is very very direct. For majority of you that do have time to be on the charts, you can use this to make some good pips. You can enter here, your fair value gap, put it all over here, put it down here. That's like what, 4 pips, and you can target all the old lows and old highs. but normally the rule is 20 pips, but this is giving us 16 pips. So you can target all the old highs. You can see it here. It's an old high here. You can target all the old highs. This is on 1 minute. You can see it now. You can see how moving it is, right? And you have banked your what? You can target this. Some people will tell you to take profits. Some people will tell you to take profit as you are taking this liquidity out. Some people will tell you don't forget to take profit as market is going on its own. You take profit, and you can see market has hit the final up end here. That's the last one here, the last high. But if I look at it, 20 pips have been hit. You can see 20 pips have been hit. If you still want to take your grid and let it go to 25 pips, it's still your choice. Let's see. You see 25 pips, but we were not able to get 25 pips, but we're able to get 20 pips. So the rule is 20 pips to 25 pips and you're good to go. Let me find another example for you. Let me delete the whole chart again. I'm looking for a bullish momentum. I'm looking for another sweep of liquidity again. Okay. Oh, okay. Now this is under Asian range, right? We are still on the trend of a bullish momentum because that is what the daily time frame is showing us, that we're bullish. I'll come down to my 1 minute time frame here and I would play it out. Market has swept the up liquidity. I might not take this trade, but as long as we're still in the time frame of 7 a.m. to 10 a.m., market did not come back. Market did not come back to us. Can you see it? Market did not come back to us and time has gone. The trade has become invalid. Time has gone. I'll keep playing. That day there won't be any trade because markets did not sweep out liquidity. Instead, market swept out liquidity on the opposite direction of the daily bias. Then I come down here. Okay, this is another Asian range again. This is how simple the strategy is. It's very straightforward. If you know how to master this strategy, you are good to go. Then I come down to my 1 minute again. I'm waiting for market to sweep down this low and shift structure. Let's see. Okay, market has shifted structure here. This is not this is like a 90% good strategy which everybody uses to trade. I have an order block here and I also have a fair value gap, but let's see if market will go in our way. And you can see we hit stop loss. Like I said, it's not 100%, but it's a strategy. Okay, and that's how you keep going. And you can see the crazy market did its way. If you go back to 1 minute again, you keep finding entry. That's what I don't really like about strategy, but it's amazing. A lot of pricing to pass proprietary firm. If you have a good, like if you are always on the charts on 1 minute, you can see it here. I really do love it. I've used to pass 1 or 2 before, but it's amazing for those that are not a trade. And you can see you can put in your long position here. There's a shift in market structure here. Can put in, this is a breaker block here, and also we have a mitigation block here, but you can enter the breaker block if you are drawn your high to your low, and you can see it. Our target is 20 pips or 25 pips and you're good to go. The target is 20 pips or 25 pips. It depends on your greed appetite and how your greed can carry you. Do you get me? Now, even though you hit a stop loss here, as long as you are seeing the time frame of 7. Oh, why did we hit stop loss? We disobeyed the rules. If you can see here, I entered this trade at 6:47 and the rule says 7 a.m. You can see why I hit stop loss. So you be very patient until you see the opening of 7 a.m. before you enter the trade. The target is 20 pips to 25 pips. That is your target. 20 pips, 25 pips, as long as your grid, where your grid can reach you. And you can see what happened here. How many did it get here? It didn't reach. You see, it didn't reach. Let me put a line there. I don't know if this is very explanatory. Okay, it got 25 pips. Oh, it got 25 pips, and you see market bounced back. So I got stopped out because I disobeyed the rule. The rule is 7 a.m., but you can see I entered at 6:45, and you see I hit stop loss. So you wait for 7 a.m. to be launched. Then when it's launched, you wait for, as long as there's sweep liquidity, there must always be a shift in market structure. You enter at the institutional reference point, your breaker block, order block, fair value gap, rejection block, mitigation block, any kind of block you can see over there. You take in your entry and you are good to go with an amazing TP. I hope this video was helpful to you. Do not forget to subscribe on my channel. I'm here to give you amazing content and value for your time, for being here, and bye. Thank you for watching.